Hi everyone, today we did get a little bit of continuation, just a smidgen, tried to go higher, and then you can see this kind of head and shoulders pattern forming, broke through that neckline on the last candle, broke through that 21 EMA, broke back below 559 to 76, headed towards the trend line here around 554. 550 is my next support, momentum bearish, and this is on the back of Amazon and Apple earnings, so everything here looks a little bit weak as we head into tomorrow, but let's take a look at all of the data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we had Amazon and Apple earnings, but Amazon was the big loser here today. You can see down 2.33% after hours, and most of that is because cloud revenue missed for the third straight quarter. This is now a trend. It's been a trend. The cloud revenue for Amazon is not growing, and of course their main business, the goods business, is going to see a lot of headwinds with tariffs, so this is not great, not what you want to see. They did mention that revenue did increase by 17%, which is good. They could turn that into profits if they wanted to, but they continue to reinvest at an aggressive rate. AWS accounted for 19% of total revenue, but they also did mention they are going to pull back on some of their cloud spend, their AI spend. They did have an increase, but only 24.3 billion, and we did see a little bit of a decline from NVDA because of the Apple and Amazon earnings. So CapEx coming down a little bit, lots of spending, and cloud revenue slowing is not a good mix for the Mag 7. With the move today, we did get to a 47 on fear and greed, up from a 35, really aggressive move on this indicator. Wonder which indicator is driving that. You can see not momentum, not strength. Breadth has been improving. It's in greed. It's been in greed. Interesting. We'll take a look at that later. We've been talking about how 20-day breadth is already capped out, but the others, the 50 and the 200, are still improving. Put call ratio, not really doing it. Volatility flat there, must be safe haven demand. Big improvement here where stocks did actually outperform for a pretty good amount of time now. So big outperformance there, extreme greed, and junk bonds still in regular greed. So big move up on the fear and greed indicator. This is probably where we should have been with the move that we've had over the last couple of weeks. And I would argue that this is most likely a short-term turning point. Moving over to the economic calendar here for Thursday, you can see continuing jobless claims, big step up. Initial jobless claims, also terrible. Global manufacturing above the 50 line, but not great. Construction spending, big miss there. ISM manufacturing, PMI, and prices, not great. Atlanta Fed GDP, 1.1%. So that's actually a little bit better versus what we've been seeing, but it is still well below that 2.4 estimate. So big move down on Atlanta Fed versus estimates. And then looking at tomorrow, don't forget we have all of that unemployment data in the morning. I suspect that this is going to be rough. I think we're going to see a miss to the downside on unemployment data, which means unemployment rate probably steps up. Non-farm payrolls probably misses to the downside. It's already expected to step down pretty dramatically, private and regular non-farms. But the big one, of course, is the unemployment rate. If that steps up, that's going to be quite bad. And I think that's going to start to present more risk of recession to the markets. Moving over to the earnings calendar, you can see Apple, Amazon, they did beat both on the top and bottom lines, but obviously that forward guide and actual growth was not to expectations. McDonald's missing on both. Interesting there. MicroStrategy, that almost looks fake. There's probably something up with that. Huge move down on bottom line earnings. CVS beating on both. Wonder how they're doing. That was a company that was very beat up. And then of course we roll into those oil giants here for the Friday session. And then moving over to the charts here, you can see we hit that 55 EMA and then we did reject from there pretty dramatically. Big wick high, hit that trend line, sold off. Momentum was flat, expecting this to step down at least a little bit more tomorrow, in my opinion. And then if we start to see that fall, I think there's a decent potential we go at least to this trend line here, another 1%, and then that 9 EMA is down about 2.5%. I think that is absolutely in play. We should expect that we're going to see a pullback into that zone. Momentum and RSI, like I said, they're still bullish at least for now, but this looks like a pretty consolidated head and shoulders pattern, left shoulder, head, right shoulder, big sell-off through the neckline like we talked about, the trend line there. The next level is that 550.12 level, so if we do sell off to there tomorrow, that's about 1.25%, but realistically, I would expect this to go at least there, around 3% lower at the bare minimum. That also takes you to those longer-term EMAs and SMAs. We really need that bigger pullback. This has been a long grinding move higher. We are below this now, and I do think we have the potential setup for a bigger move lower, at least in the short term. Moving over to the hourly chart here on the Tasty charts, you can see we hit that upper band, consolidated here, and then ended up pulling back to that 34 EMA. We're still in bullish conditions. Your trailing stop is 554.33. We'll see if it cuts through there or not. Your next level would be that 550 level, which is where I think we're going. And then that lowest ATR band just below it, 449.50. So that is the expectation, at least for now, in my opinion. And based on this 4-hour chart, that is absolutely attainable. And looking at that 4-hour chart, you can see we did pull back right to that 8 EMA 556.83, 558.42 was the level. And of course, after hours, we are well below that. And I would expect this to pull back at least to the mid-range here. Again, 551 is kind of that zone, which makes sense. And you got the 144 EMA in there as well at 549. So right here makes sense. I think we'll pull at least to that area. Then moving over here to the Qs, you can see we went right to the level 486.84, touched that level to the penny, and then ended up rejecting really powerfully from there. Momentum bearish. RSI still bullish, but we're pulling back to the level 477, and you can see all of that here on the hourly chart. Big wick to that level, very important level, especially based off of today's price action. Clean rejection, head and shoulders, broke back below this trend line here. Let's extend that out. You can see broke below it, retested, continuation. 477 is the level. If we get below that, that's going to be bad, of course. 471 is the next level, so in play would be about 1.5%, 1.6% or so, and then those longer term EMAs, those are about 4% or so in this zone. So that's what we're looking for. Are we going to break through here? Certainly think it's a possibility, especially after the reaction to today's earnings. Moving over to the Tasty charts here for the Qs, you can see really similar setup right back to that 8 EMA. We are below it there, 478.94. And then the after hours price action you can see is drifting below it there, 478.92. So we're just barely below it. I do think we're probably going to pull back into this range here, 473, 472, somewhere in there makes sense for me. And then looking at that hourly chart, you can see everything's broken. Consolidation after hitting that upper trend line as we kind of expected, and then pulled back to that 34 EMA, which right now is at 478.55. We're technically still above that, just barely. I still think we're probably going to pull back at least to the trailing stop, but realistically, your lower band target would be 473.34, which I do think we're probably going to touch at least at some point tomorrow, and that'll take you into bearish conditions, give you that bearish trailing stop, and then we'll see if this starts to change structure or not. Moving over to the Russell and the Dow, both of these are positive as well. Still continues to hold above that 95.15 area. You can see we got there Tuesday, gave it up for the Wednesday, but then we were back above it Thursday, held it on the close, looking for 198.75 if it can do it. Basically flat after hours, of course. The Russell is not going to be nearly as impacted by these earnings, but momentum stepping to bearish. RSI still a little bit bullish, so waiting to see if this goes to that 55 EMA. My guess is that's going to be the culmination point if we do manage to continue to stay bullish. And then looking at the Dow, right to the trend line, to the penny, touched the trend line, and then rejected from there. Momentum still bullish, RSI still bullish, but it does continue to show a little bit of weakness, especially in the after hours. Looks like we might head back down to that 404.47 support line. We'll see. Does it find support in there, or do we hold at the highs of this consolidation and then get that continuation to the 55 EMA? Those are the two scenarios I'm looking for here for the Dow. Then moving over here to the Mag 7 on the hourly chart, you can see we hit that key level, 283.47, hit that level, could not get above it and immediately rejected. Makes sense. Same levels across all of those charts. Are we going to pull back to 273.41? My guess is that we will. Momentum is bearish, RSI is bearish. This is the hourly chart. But let's go to that daily chart. Really similar setup to what we saw there. Big gap higher, through a wick to that 200 area and then rejected from there. The momentum is still bullish, but look at that after hours price action, down $2, almost $2.50 in the after hours, waiting to see what happens there. But realistically, this should continue lower, at least retest 273 tomorrow. Moving over to Apple and Microsoft. Apple had a good day initially, and now you can see we're down almost $10 in the after hours. Probably going to head to that 21 EMA down at the 200.71 area. The trend line's here, 201.21, my level 199.54. So we were trying to grind higher. We got the step down on momentum and then a huge move down on earnings. We'll see if that continues to follow through or not tomorrow. I expect that it will. And then look at this move on Microsoft, 7.6% to the upside, huge gap higher, huge volume. Hit that level, 429.88. We said if 394 broke, we should see a massive continuation. Sure enough, we did. I didn't think it would be quite like this. I thought 413 at least, but now all the way up to 429. That takes us back to this consolidation range. Is Microsoft actually worth this? Should you be buying it anytime it dips below 394? I think that's a fair assessment at current, but either way, it's still expensive on the short time frames. RSI, super overbought, critical level, need to see it get above 429 if you're going to trade this to the bull side. Moving over to Tesla and NVIDIA, those rumors about Elon being taken out as CEO were apparently fake, and we ended up getting a nice little pop there, and then it did close right at the level 280.06 after hours, continues to sell. And then look at NVIDIA here, much more interesting on the trade, gapped up, hit the trend line as we kind of expected that it might. And then it did continue to sell off of there as everything else did. So this is still very much a downtrend. Market's hitting those key resistance levels. And we'll see if this follows through tomorrow. If it does, 106.6 is the next level. And then back below that would be to these lows at the 95.74 level. Moving over to Amazon, you can see it was an okay day, up 3%, but then we ended up down. You can see about $5.50 there, big move down. Continuing towards that next level, 181.41 is my support. That takes you to the 21 EMA as well as VWAP in here around 180 to that 181 area. That is the expectation, in my opinion, for Amazon tomorrow. And then looking at Google, Google actually did okay. It was up 1%, and it's actually up a little bit more after hours. So Google seems to have found a base post earnings, continues to look okay here, and you could absolutely trade off that 161.59 level. Moving over to Staples versus discretionary. Staples was down, so gapped up, gapped down, not a great indicator. It seems like Staples is going to kind of hover in this zone. So anything around 78 and below is a buying opportunity. Anything above 82.50 seems to be a bit of a sell right now. So you're in a trading range. That seems to be the move on Staples. And then looking at discretionaries, as you would expect, gapped up through a big wick, hit the level, 253 cents, and then sold from there. After hours down about $1. Momentum stepping down. I would expect this to fall at least to that next level, 93.81. Moving over to 20 and 50 day breadth here. You can see 20 day completely flat. This is peak, in my opinion. Momentum starting to roll down. I think we are going to see this roll down over the next week to 2 weeks, which means markets should be correcting at least a little bit. Does that mean we go to lower lows? That remains to be seen, but in the short term, at least expecting a pullback there. And then same here on 50, gapped up, hit that 144 EMA. Thought we might go to the 200, but it seems like the 144 is going to be your resistance. Momentum stepping to bearish, RSI going to pull back at least a little bit. Want to see this get below 40 level. And then I think we'll go at least to 32. Realistically, this will probably go back to 22. And then we'll see, do we get the higher low setup, or does this throw another big wick down to these really, really low lows? Either way, though, we didn't get very high, and I would expect this to pull back here, at least to this kind of 22 to 26 area. Moving over to the dollar continues this kind of ramp here. We got above the 99.83 level, so you could have bought it on the break. It did have a big breakout retest continuation, so maybe you got faked out on there if you were looking for the trade. Short term price target would be the 21 EMA there at 100.54. We'll see if we get a touch of that level tomorrow, but you do have a nice little base here, higher low setup. We did get above the level. You do kind of like this as a potential bullish structure. We've seen it before. We had a nice little base, got a break here, got above the level, and then we ended up rejecting lower. So I wouldn't say this is for sure a turning point, but you do have something that you could trade off of at that 99.83 level. Moving over to bonds, J&K gap down, fell about 0.5%, momentum falling, RSI right at the SMA. We'll see what happens tomorrow when we get that touch. I do think we will get that touch. And then looking at TLT, same thing, back below the 89 level. Buying opportunity starts once again. Anything below 89 to 85 is a buying opportunity in my opinion, even if this pulls back a little bit more. Momentum says it could go a little bit lower. RSI says it could go a little bit lower. Once we get a touch there, I would expect this to bounce. So expecting a higher low setup, but either way, short term, probably a little bit bearish. Moving over to the VIX, you can see the VIX did end up basically flat, continues to hold in this critical level. I still think this is the start of a swing higher, momentum swinging higher. The RSI is not going with it quite yet, but this step on momentum, 2 days in a row, I think this is going to start to curl to the upside, and that is going to be very bearish for markets. Moving over to my accounts, I traded quite a bit on the day, 5 trades. trades in and out. Most of those were bullish until that very last one. I was short into that major sell-off. I decided not to hold it overnight. Apparently that was a bit of a mistake for the Qs, but I'm okay with it. I think we'll go lower tomorrow. I think there will be more opportunities to the short side, but I did make a little bit of money, made back most of the money from yesterday, or at least about half of it. Still well into the green again, so you like to see that. Want to see year to date go green tomorrow. That would be fantastic as well. But right now my thesis is to the bear side, especially with that topping structure. Of course, I still need to see levels break, as I do with my trading style. As those levels break, I will go short at those levels, and hopefully we get some kind of continuation lower over the next couple weeks. Let me know down in the comment section what you thought of the earnings. What do you think we're going to get for the economic data tomorrow? Will the jobs data send us much lower? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.